Hello, everyone. Today, we're going to break down the American market, take a look at a few instruments, and highlight the key points that I hope will help you make well-informed trading decisions. Let's get started. And today, we'll start with the S&P 500 on the monthly chart. Since the last review, almost nothing has changed. So far, everything's going according to the previously outlined plan. The price continues to trade around the round level of $7,500, and lately, selling volumes have been increasing, which could indicate the start of a correction. Let me repeat what I expect from the upcoming movement. Earlier, I highlighted the previous effort level in the range around $7,000. This level is key for determining future targets. The first scenario for future movement, if this level holds, then I will expect a renewed rise up to the $8,500 level. And the second scenario is if the level does not hold, then I will expect a deeper correction, which should reach approximately the $6,250 level. After that, I will also expect the asset's price to resume its growth, but this time with targets above $9,000 per share. Next, let's move on to the daily chart. The price continues to move within a sideways range. In this movement, the buying and selling volumes are roughly equal, so I can't identify a dominant side. But this also indicates that the buying power is running out, and I consider a price drop, at least to test the previous effort, as the main scenario. Still within the sideways movement, the price may rise slightly above the nearest high once again, but only for manipulation and liquidity collection, after which the price will be pushed down again toward the level of the previous effort. It is at this level that we will assess the player's efforts and set the next targets for the asset. Therefore, for those who hold shares in their portfolio, there is still nothing positive to expect in the near future. A scenario where growth continues from current levels is possible, but highly unlikely. In my opinion, the position in this asset will be at a loss for some time. But on the bright side, this will only be a correction of the previous growth. It's too early to talk about a global reversal for now. I believe it only makes sense to buy or add more shares after the correction's over. In the best case scenario, this would be in the price range of $7,000, and in the worst case, $6,250. Next up are Google shares. On the monthly chart, the trends and levels remain relevant. Last time, I noted that after the price reached the previous effort's test in the $350 range, it started to rise, but there was no interested party in this growth, and the buying volumes looked like actions of retail investors who were expecting the uptrend to resume after the test. Based on this, I predicted a further decline, which is exactly what happened. So for now, the scenario of a decline is playing out. But whether the price will reach the $275 range is still unclear. Let's switch to the daily chart and take a closer look at what's happening. Here's the situation. The price gapped down to the lower boundary of the uptrend, which suggests that, in theory, we could expect the upward movement to resume. But first, we need to establish a local downtrend. Let me mark it out. Accordingly, we can't expect a major upward move until this trend is broken. In the current situation, most likely the price will come back to fill the gap that is formed, after which I expect the movement to continue within the local downtrend according to the previously outlined scenario, roughly down to the $275 level, where I'll be looking for a resumption of growth. So for those who are holding shares in their portfolio, as long as the price is moving within the local downtrend, you shouldn't expect the asset to grow. The price will continue to rise either after breaking the current trend or after the correction is completed, which I expect to happen around the $275 range. At the moment, I still consider it risky to buy or add more shares. It makes more sense to wait for the correction to end or for the current local trend to break. Next up are Apple shares and their monthly chart. Despite my doubts about continued growth, the price managed to break through the local high and is following the previously outlined plan to continue moving toward the target of $375 per share. But ahead of us is another strong level in the $350 range, which could stop the price, but I don't think it will change the overall direction of the movement. It might just hold the price back for a short while. So I'll keep my chart expectations unchanged. There's not much left to reach the target. Now let's switch to the daily chart. Here, the prices almost exactly follow my expectations for the movement, but I like to repeat what I said earlier. Ahead, there's a level at $350, which could send the price back for a retest of the previous effort, but it shouldn't actually change the structure or the target of the movement. I think that in the next review, we'll already see the price in this range and we'll be analyzing the activity there. For now, everything is going according to plan, so I'll keep my chart expectations unchanged. For those holding shares in their portfolio, everything is currently working in your favor. The previously mentioned target of $375 remains relevant. It's possible that before reaching it, the price might get stuck for a bit in a sideways movement around the $350 range. But whether that happens or not, only time will tell. I don't think it makes sense to buy more shares at these highs, only if it's for a short term play. So that's roughly how I expect things to play out. If you think differently, let me know in the comments. And don't forget to like and subscribe to the channel so you don't miss future reviews. I hope this was really helpful. And don't forget, we can make assumptions, but the market decides.